Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher, and thank you so much for spending your most valuable resource, your time with me for another episode of the Cashflow Ninja. I've got an amazing show for you, another amazing guest, Matthew Pillmore. He is the president of VIP Financial. He, by the way, has been on the show before. If you missed that, you have to go to cashflowninja.com/368, because in that one, he just provided so much value talking about a lot of different approaches to wealth creation, how to combine some of them. He even went as far as taking some of the best of what Kiyosaki, the Rich Dad, Poor Dad crowd had to offer, and also some of the Ramsey folks, the Dave Ramsey, and kind of showed us how there's room and place for both of them. I'm excited to jump in with them in today's conversation at this time. Matthew, welcome back to the show.
Thank you, brother. Hey, I appreciate you as always, MC. Yeah, I'm looking forward to diving in. It's a totally different time, obviously, than where we were at the last time we spoke. And, you know, it'll be interesting to compare and contrast sort of what we discussed then to what we should be doing now, because so much of it still applies. That's why I made sure to wear my We Do It With Debt Weapons t-shirt here today. I haven't busted this one out for a while, but it still is so imperative right now that we continue to look for these various tools to get us through this chaos, this mess. So,
yeah, I think when the two of us spent some time together in person in Denver, we were kind of looking at the world and seeing that, hey, you know, we're probably due for some correction at some stage. We were looking at, you know, very overheated asset classes and so forth, but what occurred, I didn't think that came up in our conversation when the last time we were together.
I didn't crystal ball any of this. This is about the worst case scenario. And it's, you know, like Warren Buffett always likes to say, people, you know, we'll see who has their pants on when the tide is out. And so this is going to stress test a lot of folks. But I also think there's a lot of reason to be excited about what can shake out of this. If you can remain proactive, there will be a lot of deeply discounted opportunities ahead of us too. So,
yeah, absolutely. So let's do this. Let's look at the landscape a little bit where we're at now, because you know, it was somebody had shared a video with me from Simon Sinek, which I thought was quite insightful, where he said it isn't necessarily unprecedented times; it's just the speed of which this happened, where during massive changes, sometimes you could slowly see it coming. You know, the internet kind of taking over. This is something that was brought in, and then all of a sudden, yes, it was a massive change in what was going on. To his point was like, look, changes happen all the time. This happened like this, because literally every came to a stop. But again, looking at it, taking a step back and looking at it saying, all right, changes happen all the time. What can I do? But so let's talk about the change. The world economy, basically, they flipped the switch on it, quite literally. What are some of the things that you're seeing right now, just to get clarity on the overall situation before we get into how to navigate this and look for some opportunities?
Okay, so I think obviously, you know, most people will agree facts are friends, right? And to your point, if we can stay as aware as possible, that's going to be useful. But I also think step one is going to be to minimize the clutter. So social media and the media in general, I think, has become an enemy of progress for us individually. It's easy to get sucked into these polarizing conversations where we all have sort of established opinions about, you know, where we stand on one subject or another. And it can exhaust a lot of our energy. It can put a lot of mental strain on us. It's terrifying a lot of the time. So sorting through productive facts and getting to actual information that we can work with is not only difficult, but it's really, really important to do, right? Yep. And I'm guilty of that just as everybody else is. But so remaining aware while still not going deep enough to where it's compromising our mental strength is the first thing I would recommend. Okay. Now, with that in mind, let's talk, when we start to see substantial changes economically, like 30 million unemployment filings since the middle of March, when we start to see restrictions inside the banking and lending world, these are things that should allow us to understand more clearly on a national level, most importantly, what's coming. Because the most important thing, and maybe you can chime in on this, is really focusing on our individual household economics. I mean, what else can we really control? I can't control whether it's 30 million or 35 million unemployment filings. I can't control whether the banks are choosing to increase the down payment requirements or the FICO credit score requirements. What I can control is my own individual FICO credit score, and I can control how I look as a borrower. And the stronger I am, the more benefits I'm going to have from that. And so my specialties really involve how to bank and borrow the right way. When you talk about blending Kiyosaki and Dave Ramsey, it's because my specialties, are fairly narrow. I don't consider myself an economist. I don't consider myself the end all be all in terms of knowledge surrounding where to be putting investments. What I consider myself great at is how to use leverage in a way that I prefer personally, which is just one of many ways of skinning a cat. And the way I prefer to borrow is by treating leverage as a privilege, as something that actually is a benefit, as something that I recognize it as a way of speeding things up. I look at it the same way as I look at being able to drive a car, right? It's a privilege. But if I treat it irresponsibly, it's a very dangerous thing. And that's why someone like Dave Ramsey is so against it for his audience. It's not because he doesn't understand mathematically that it can work. It's that he realizes that statistically, too many people are too irresponsible for him to safely feel confident recommending it. But if he was consistent in his messaging, he would also be suggesting people shouldn't drive, because there are enough irresponsible people driving cars too, that maybe we should just stop anything that could cause us harm, including, using a table saw, for example, right? So It's just a tool. So, I love leverage, but I also, just like Dave Ramsey, I hate debt. So I have created this concept of being able to reinvent my repayment terms in any way, shape, or form I can uncover, identify, and be able to pay debts off really fast. So what's the benefit to me? My benefit is I can access all these various instruments and not only save my own ass when things get unpredictably weird, like now, but I can also have access to additional liquid capital to put into the inevitable opportunities that are going to be coming up. So I know I jumped ahead of you there, but I just wanted to contain the conversation into what I know best, because what I don't know is what is happening with the stock market. Right. It's ludicrous. So I'm not going to sit here and try and explain anything that's going on economically, but what I do know I have control over is my own household. And even that is limited. So let's focus on the facts of where I can control the areas that I have limited control over. So that would be where I'd like to take the conversation.
That is very, very powerful, because to your point, that's one of the things that we've talked about too. We cannot, we cannot control uncontrollable variables. So, I think people are going to look back at such a missed opportunity where they could have focused their energy and their resources much more wisely. To your point, they're getting sucked in by very negative media and also arguments on social media about stuff that in the big scheme of things is totally irrelevant, to the point that you don't have any control over it. So let's build and invest and do something within our own households that we do have control over, and things that we can control. So for example, one of the variables is, you mentioned the unemployment, and these are things to look at. Yes, there's massive employment. How's that going to affect the environment? We can't control when, this is over, when it's opening up, whether we should not. Those are things that are going to take away from your focus to be as productive as you can and have clarity. So you look at that, and then we'll get into some of the stuff, how that affects things, because that number is a ripple effect that goes through the economy. So now all of a sudden, people are unemployed, so rent's not paid, mortgages are not paid, which then ties into a lot of other things, right? Businesses are struggling and going out of business. So it creates a landscape of, yes, it's quite chaotic. Yes, it's a little bit frightening at first, but if you take a step back and say, okay, I can't control any of these things. This is what it is. I've got some clarity. Now there are some things that I can do. And it's been one of the greatest opportunities ever to study and go to YouTube channels like VIP Financial and learn, increase your financial education, and learn the power of a lot of debt weapons that you talk about quite a bit, and learn so many different things. So that being said, let's talk a little bit about where people should focus some of their time and efforts right now financially. What should people be doing in a time like this? Blocking out all of the other crazy stuff that's out there, which if you are going to try and find crazy, it's not hard to find.
Yeah. Well, again, I think volatility should be the expectation. Unpredictability is obviously upon us. If you are a 9-to-5 W-2 wage earner who has an employer, expecting that your job could be lost would be a pretty smart thing to prepare for the possibility of. My dad is an Eagle Scout, so I was raised with the inherited DNA of being somebody who's overly prepared, and so I would approach everything from that standpoint. I would just be, look, you can have say a gun with you in the woods in case you're encountered by some vicious animal, and not need it. And having the gun came with no downsides. A show I happen to like is Naked and Afraid. I think it's hilarious, right? I mean, and it just blows my mind how addicting such a crazy show can be. But there's so many times where these two partners that have been paired up don't see eye to eye. You've got one person who's really into the preparation aspect, another person who's sort of optimistically thinking something's going to blow over, so they'll see a storm coming in, and you've got the preparer saying, let's get as much firewood as possible. The other person saying, well, let's just have just enough. And next thing you know, they're in a torrential downpour and on the verge of hypothermia. I never think you can have too much firewood. And to your question, as far as debt weapons are concerned, there's no such thing as having access to too much money. I've been saying it for 2 decades. Obviously, the initial instinct from somebody that is reluctant to borrow money is this automatic association where they tie access immediately to debt. And that's not the case. It only becomes debt if I use it. If I have it available, then it's what I call JIC, just in case, right? Just in case an emergency, or just in case an opportunity. Well, again, those are the two most glaring realistic probabilities that any of us are facing right now, is emergency and opportunity. So let's JIC our collection of capital. So the first thing I would do is analyze where I am as a borrower, right? Get access, if you haven't already, to a Credit Karma account, and really start to dissect your credit profile. It's a free account. There's absolutely no excuse for not having one. And while you're looking through that, it's important to know that that score provided by Credit Karma is not the same score that the banks are going to be looking at. The banks are going to be using your FICO credit scores in most cases, which, in order to get your FICO credit scores, you either have to have a credit card provider or a bank that offers you access, in most cases just to one, and there's no report to follow, or you have to buy it, and you buy it from myfico.com directly. upon my last search, it was something like $20 per bureau. Okay. Now, I do not recommend buying your FICO credit score unless you're teetering on the edge of that 700 to 720 credit score mark. Up until the pandemic, we recommended 700 as the minimum, even though some debt weapons you could qualify for with even a 680. I'm always going for a more conservative, favorable type of borrowing strength before I'm submitting an application, okay? Because I want to increase my odds of approval as much as possible. So because the crisis has now stimulated changes in the underwriting guidelines, banks are starting to get more and more strict once again, just like we saw back in the last downturn. And a 720 would be where I'm really starting my targeting. And then I'm working to get at least a 760 or above, which I've been recommending again for 20 years. You have to have a 760 and up, even though most favorable borrowing terms are going to come at a 740 or better. The reason for that extra 20-point cushion is in order to help absorb the natural volatility that comes when you're active utilizing your credit as a tool to your benefit. Okay. Now, again, I cannot stress enough that the fiscally irresponsible will want to ignore my approach. If you're fiscally irresponsible, what I'm talking about in terms of actively using credit is not for you. If you are responsible with your credit, we use these tools only for wealth creation. And at times, wealth creation involves stabilization and throwing out the life preserver. I mean, it's a life raft. And so it's not like I'm using a debt weapon in a hectic financial emergency strictly to go out and buy something frivolously from a consumer-based standpoint. Again, avoid using credit if all you're using it for is consumer related. We're only using these to increase cash flow. Okay, so how do we increase cash flow, MC? We increase cash flow by making more money and spending less money. That's it. There's the only two ways to do it, right? Very simple mathematics. Make more, spend less. Make more, spend less. Now, up until COVID, as a lifestyle-based educator, where Dave Ramsey and I struggle to see eye to eye is on the spending less liability side of the balance sheet. I am not a fan of sacrificing the quality of my life. I don't want to give up things I love. I don't want to give up expensive coffee. I don't want to give up weekends away. I don't want to give up international travel. I don't want to give up being as generous as I choose. I don't want to give up expensive glasses of wine or eating out at restaurants. Those are things I really, really enjoy. I enjoy materialistic stuff as much as anybody else too. I like nice vehicles and toys and all that stuff. So Dave and I I'm not going to be eating beans and rice every day. I'm just not, period.
Yeah.
And so the spending less side of my balance sheet is number one, already restricted for everybody, right? So even following Dave Ramsey's plan, beans and rice still costs money, right? You can only spend less to a maximum capacity.
Yep.
Whereas the making more side of the balance sheet literally has unlimited potential. And so that became really, really motivating for me. It became so intriguing that I began spending less and less time nickel and diming the liability minimization side of the balance sheet, because it's like, look, I'm going to focus on the big stuff. I'm going to focus on how can I pay off my mortgage in 3, 4, 5 years and save hundreds of thousands in interest. How can I pay off my car loan much more quickly and save thousands in interest? How can I avoid high interest costs on consumer related debts? How can I get really good credit scores in order to minimize my insurance premiums? How can I avoid spending more money than I should on taxes, right? If you don't understand and have a great tax plan, you will likely stay middle class. Taxes will consume way too much. These are things I hate spending money on. So I'm going to focus on those big things. And then I'm not going to nickel and dime inside of that as much as I could otherwise. I'm not going to figure out, well, if I just, spend 20 hours figuring out the magic of how to repay this balance using either my formula, lump sum payments and paycheck parking, or using Dave Ramsey's formula called snowballing, or using the avalanche methodology where we attack highest interest rates first. That to me is irrelevant, because the difference between any of those proactive plans might be thousands of dollars over years' time. $5,000 over 5 years does not excite me at all.
MC Lobster here, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com.
What I'm trying to figure out is how to make an extra $5,000 a day. And so what I would encourage your listeners to really be doing, outside of, number one, identifying your borrowing strength so that you can start to target access to more capital, is to really focus right now on polishing skills, learning new skills that can create unlimited forms of future income for you. And yes, moving forward on a lot of these new business ideas that you come up with might require 2, 3, 4, 6 months until the virus aspect of this pandemic is behind us, because there are too many unknowns and there is so much uncertainty that right now is dedicated to the research stage. It's dedicated to what we call the day zero activities, right? It's like, hey, I can form an LLC, right? I just formed an LLC the other week. That is absolutely something we can be doing. We can create a brand, going out and paying somebody $5, $10, $50 on Fiverr.com for a logo. We can get an idea or a concept of the type of business that we want to be in, or at least start eliminating the types of businesses that we absolutely don't want to be in, because obviously we're not looking for things that we would hate doing day to day and putting literally more hours than we ever imagined working into. You and I are both working more than ever on businesses. We better enjoy it. If we hate it, we're miserable, right? So It's not about, hating something. It's about accepting discomfort and welcoming discomfort and welcoming problems, because as somebody that is looking for new skills that can turn into unimaginable amounts of income, we've become professional problem solvers. So that's the two things I would do. I would figure out my borrowing strength, and I would start working on unlimited income potential moving forward. And that can be in any industry that excites you the most. My favorites are, how do I make money from my laptop? I want to be able to be anywhere in the world and make millions per year, and real estate. Those are my two areas that I focus all of my energy.
Yeah. Those are so valuable. And I love how you put it too, like from day zero, basically starting your business, because I think at this point too is patience and building a lot of value is going to be super, super key. So you're going to have to put in the hours, and it's not going to be profitable right away. It would be not normal if it was. It would be an outlier. So you're going to have to really put in the hours, and you're going to have to really build value in this economy, because people are still going to seek out value. They're not going to stop doing that. People are still going to look to solve problems, and people that are solving these problems for them and over-delivering on value are going to be people that they turn to, especially during a time like this. There's a lot of people out there that are putting as much value as they can out there and not expecting anything in return right now. And they are solving problems for people. And eventually, once that established, the brand is established, then now you're really going to start building that business in this new economy that we're turning into. Quick question for you. There's some really inspiring stuff that I've seen too. If you, again, to your point, the media and the social media is going to suck in a lot of negativity. I've seen so many incredible things that people are doing from a business standpoint and reinventing basically their businesses, right? There's someone in our network up in Canada, a restaurant, that basically realized that when everything shut down, that what are some of the strengths that they had? Well, they had access to a supply chain, which is different from grocery stores. So they actually ordered in more food. Instead of just doing meals, the restaurant basically turned itself into a grocery business. And they're packaging up, selling groceries curbside, delivering groceries, and so forth. And they're doing better than ever. That's just one example. There's many of that. What are some of the things that you're seeing out there, some of these stories of people that are innovative, that are creative, and starting to do amazing things?
Yeah, I think adaptation is the key. I mean, if you want to be entrepreneurial at all, you better prepare to adapt. And that's true Corona or non-Corona. You know, you have to become your own greatest competition. And I can't recall where I learned that if you're not putting yourself out of business first, somebody else is definitely going to be, which means you've got to always be looking for that next best angle. You know, I recently had a conversation with a gentleman who started to identify there's obviously a dire need for kind of over the road food-based delivery. And so he ended up getting involved in trucking, specifically within potato chips. How unusual. In fact, he and I were sort of chuckling about the fact that he, you know, would have never imagined himself in that space. And you know, I can't help but relate to that, because even just 4 years ago, you know, I was doing the exact same thing that I'm doing today in a sense, but I was doing it over the road, where I was on stages 2 or 3 cities per week. And for those of you guys that have ever spent that kind of time traveling, you know that the novelty can wear off pretty quickly. I mean, it's exciting for the first couple of weeks, but you know, after you're away from your loved ones long enough, and you're living out of a suitcase, and you're flying red eyes, and you're eating shitty food, and you're, you know, not able to do any of your hobbies that you enjoy, and you realize that a considerable amount of the time that you're spending doing this is actually just sitting on an airplane, which, by the way, I know everybody travels differently. And as an entrepreneur, I like to make the most of my time. But when I'm on an airplane, I mean, before we even leave the tarmac, I'm asleep. I cannot stay awake. I don't know what it is. Maybe I need to try something else, some Red Bull or something, to just power through it. But I'm so unproductive on airplanes. And so for me, I just realized that this was, you know, it was gradually over about a 12-year span leading to what I would consider to be a pretty miserable life. And it was ironic, because I was seeing myself in a more and more hypocritical light, where I'm standing on stages and talking about lifestyle, and I had no lifestyle whatsoever. And so it didn't matter how much money I was making. When I talk about cash flow, which is really what I'm focusing on financially at all times, I'm always looking for, again, make more, spend less, more, spend less. I want as much money left over at the end of every month as possible. That to me equals freedom of choice. And that's all I really want, is freedom of choice. But not all cash flow is created equally. And I began to have to acknowledge that to myself when I was miserable. And I even will look at some of the, you know, the dream jobs out there. I mean, I've heard a lot of professional athletes describe being miserable too. You know, I mean, a professional baseball player has the exact same life I just described. I mean, it looks terrible to me. Some people may look at that and go, that would be awesome. But for me, I look at that and say, no thanks. For what? A lot of money and a little fame? You can sell out when it comes to cash flow. So again, we have to figure out things we love. And it was bizarre, because my mentor at the time, who's now my fiance, told me, you know, she called me out on it. And she said, you know, you're completely unhappy. Look at all of these things that are wrong about your life compared to what you would describe as the perfect lifestyle. And so I had to make a real pivot in my decisions, and decided to focus my energy on YouTube, which is where most of my development and education is spent now. Now I only accept 5 to 10 live speaking engagements per year versus 5 to 10 a month. I love doing something like this, where we're virtual. I can still be at home. I don't miss out on anything. Yep. And you know, today, 4 years later, you know, that turned into hundreds of thousands of dollars per revenue monthly. And if you would have told me 5 years ago that I would call myself a YouTuber, if you asked me what I do, I would have laughed in your face, because it's absurd. It's absolutely absurd. But what is that? That's an example of a shift in the changing times. And whether we like it or not, times are always changing. Yep. It's not just COVID. COVID is just, you know, again, it's like you said, accelerating certain aspects of it. It's accelerating the fact that technology is the trend. I mean, if you weren't aware that technology was where we were heading before, you better know it now. I mean, I've never spent so much time on Zoom in my entire life. So we are definitely, as entrepreneurs, required to adjust and to seek things that seem ludicrous maybe at first, But that's where the most opportunity is going to be. It's not looking at the old-fashioned way of doing things and trying to stick with it. I would say one opportunity that seems most promising to me recently is the short-term rental market. I'm actually sitting in an Airbnb that I own right now. Okay, this is a short-term rental. It's my only short-term rental. We've actually quarantined here in the mountains, and I had a very interesting collaboration with a gentleman off of YouTube that talks a lot about short-term rentals, but his approach is totally different than the way I was doing it, which is through the arbitrage standpoint. And I think that moving past COVID, right after the bug is behind us, how many people right now are so stir crazy and have so much cabin fever and just cannot wait to have that first weekend away? Yep. I personally believe that this could be a huge opportunity, but you look at the short-term rental industry in general, and it's a complete shift. It's a disruption to the market compared to traditional long-term buy and hold real estate investing, which is something I was always interested in. So yep. Again, it's an example of thinking about things differently and seeing bigger opportunities, but I can literally get into short-term rental hacking, and for a tenth of the price of a long-term rental, I can make twice the amount of income from that on a monthly cash flow basis. So people need to be getting out of their own way. There's just too much old dogs not learning new tricks, so to speak.
Yeah, absolutely. And there's going to be a lot of different opportunities in a lot of different niches. I just think of, the two trends of technology. Think about the technology now that we were going there anyway. We were going to a world where most people work virtually from home. And this just accelerated the process, which is going to disrupt commercial real estate, office buildings, and so forth, big time. And with that, that's going to bring in opportunities for other entrepreneurs.
There's a mass migration happening right now, MC.
Yeah.
Out of the cities, right? Metropolis is now a lot less appealing. People are starting to go, oh, wait, now I remember why I liked the idea of a backyard at one point, right? I was a downtown guy. I moved out of downtown Denver, where I lived for 4 years, in January. Just coincidentally, the timing worked out that way. But, I can't even imagine being downtown right now. Right. It would be horrid. So, I think that if you know that, though, right, and if you see that, hey, there are these changing mindsets as kind of a culture, again, where can you spot potential opportunities? The suburbs have now become a much higher demand area than they were up until recently. Same thing with, this property that I'm in right now has, it's 5 acres. Well, guess what? Everybody looks at that and goes, yes, please. I wish I didn't have neighbors sitting around me all the time. So it's, my life hasn't changed at all. I feel like I'm sitting in a park all day, every day. It's great. I think if that's true, how can I then maybe get into the short-term rental market where I have more acreage? And my calendar is booking up so fast already because everybody can't wait to get out of their clustered, claustrophobic areas and get out to a spacious 5 acres where they can escape the madness. And so that's where I'm thinking, okay, where's the opportunity in this as an entrepreneur, and how can I then lean on the debt weapon accounts and the capital that I can get access to in order to make the investment into that business model. But I would, as a resource, certainly recommend Airbnb Automated is a really amazing channel on YouTube just for your audience to check out. We're going to be doing a collaboration on our channel, VIP Financial Education, where I brought Sean in and talked with him about that concept. But that's one where, again, for a very limited amount of money, if I can just get access to 20 grand from a line of credit, I could realistically get into 3 properties, whereas 20 grand wouldn't even buy me one $100,000 house as an actual buy and hold investor. So how can you stretch the dollar is really important. It also limits risk, obviously.
Yeah. And the other thing that I'm looking at too is, to your point, doing these steps that you've already listed: credit, very important. Access to debt weapons, cash, access to liquidity is going to position you for other opportunities in the real estate market, because most folks just saw already that some banks, I believe it was JP Morgan, was raising the credit score already that's needed for mortgages, right? And now some of them already eliminating access to HELOCs. Now, a lot of people would say, look at this and say, well, 20% down, I think was the other thing that they did, and raise credit scores, will look at this negatively. Well, if you are positioned and you have the correct credit score, by focusing on it, as you had suggested, and then also leveraging the debt weapons that you have and having access to liquidity, guess what? Now you're in a smaller pool of buyers, right?
100%.
Ready to capitalize on opportunities.
100%. Yeah, I mean, you can become part of a smaller herd that is able to take advantage of the increasing number of opportunities. So it becomes a supply-demand issue, right? And it's not even less demand. I mean, everybody still might want it. It's a limited capability aspect. You know, people just can't get what they want. And to that point too, MC, there was a video that I did recently on my channel talking about how I'm tapping into these debt weapon accounts. So a real brief example of that is 2 weeks ago, I went ahead and just extracted roughly $300,000 from an unsecured business line of credit and a secured non-owner occupied home equity line of credit, two really powerful, same as cash accounts, where I was able to just electronically transfer from the availability of the account online into a bank account. And at one point, I was even going to demonstrate the ability to get access to the $100,000 of that 300 in cash, just to test the liquidity of my banking institution with everything going on, which in this case happened to be JP Morgan. But a lot of people would question that. Why would you take $300,000 and go into 300K in debt without really having a purpose for that? And the answer is quite simple. This type of disruption in the lending industry creates changes by which the banks make their decisions. So like you mentioned, we're seeing increased credit scores, increased down payments, and even products going away. The fact that Wells Fargo and JP Morgan are taking home equity lines of credit off the table is also an indication that someone like me, who already has access to a home equity line of credit, which is from a different bank, from Vectra, I just put it into a JP Morgan Chase bank account, that those are going to be on the chopping block.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements.
In the last downturn, I had 3 home equity lines of credit that were frozen. Now, that's not because I called and asked them to be frozen. It's involuntary. I don't have a choice. I just have to deal with it. Again, this is outside of my control. I have no control over how the banks are going to respond. But what I do have control over is, can I get access to the money? And if I know that something is possibly going to be coming and even probably going to be coming, well, I want to stay ahead of that. So I can take the 300 and claim it, hold on to it, and then for the next 6 months, pay interest on it. Now, based on my current really low interest rates, which is a benefit of the current borrowing environment, I have a 3.5% rate on that home equity line of credit. I have a 5.5% interest rate right now, which came down. Again, everything just keeps dropping. These are variable interest rates. So as the rates change from the Fed, I reap the benefits of it. The total cost of interest to me before the most recent rate drop was $13K a year. Right, so $6,500 every 6 months is my gamble, right? And this is why, like I said, I'm sitting in front of this backdrop because it's feeling very Wild Westish out here right now. So yes, I admit I'm taking a gamble here. $6,500 every 6 months, which is now dropped to somewhere around $5,500 every 6 months in interest costs that I'm willing to pay in order to have that extra $300,000 in cash ready to either move on a business or move on real estate of any type or a combination thereof. And so do I recommend that for everybody? No, again, these are more advanced strategies that somebody like myself that feels very confident in my ability to remain responsible with the money and only use it if I know at some point or feel optimistic at some point that I can get cash flow that well exceeds the cost of that short-term interest cost. And then once I acquire that new income producing asset, I turn around and I just pay that debt right off in a matter of 2, 3, 4 years maximum. And you can even check out on my channel how I paid off a $220,000 mortgage in 4 months, right? That's a $55,000 per month additional principal contribution. That's all purely cash flow. So I hate debt. I don't want the debt, but I love access to the money and the tool. So I'm going to use that tool to get as much money as possible to pay the debt off as quickly as possible too. So that's the summary, but I would start there is trying to figure out where you fall on that spectrum of confidence that the gamble will pay off for you too.
Yeah, absolutely. And to anticipate what's coming, this is a very, very big lesson that I learned that I think our listeners and viewers might find valuable too, is when you have clarity, like we said in our initial discussion, and you see what is, then a good exercise will be what is going to be the result of these things happening, right? So another good example right now, unrelated to this, is if you look at, like, for example, the food supply. You know that a lot of restaurants closed. You know that there's a lot of basically just a lot of commercial enterprises that have access to the food supply that was basically shut down or limited. So there's a huge imbalance with that. So what is going to be the result of that initially, right? Now and when the economy starts going again. So write down certain scenarios and then prepare for whichever way it goes. Will there be food shortages? Well, then I have some food that in home and I stock up, right? Will there not be food shortages? That's fine. I still have that food. I'm going to eat it at some stage, right? But being prepared for all of this, and there might be a spike in prices. Let's just say there's food shortages and then all of a sudden the economy opens up and now there's a demand and a supply issue that's off balance. Again, there might be some increased prices. So these are just little things. So with real estate, Matt, you were just talking about basically the credit scores that are raised, the down payments. It's going to be a result because the banks of basically defaults on mortgages if we're in a similar environment than 2008 and 2009. So if you live through that, make a list of things that happened, because the probability is probably high that something like that could occur again. Any comments on that?
Our choir has been singing that since the last downturn. What do you think I've been telling people to do since the last downturn? Focus on your credit to get capital so you can build cash flow. The problem is, again, the tide is going out. So it's very obvious at this point who was listening and who wasn't, Yeah. And are you going to make the same mistake again? I mean, 10 years from now, when you're retrospectively analyzing your behavior, are you going to have regrets, or are you going to be staring lifetime wealth in the face? Because that's what's coming. And the best time in history, in my lifetime anyway, to have built or started a business was in the bottom of the last downturn. So again, this should not be seen as discouraging. This should not be seen as the time to put your head in the sand and to do nothing. I know it can become on a day-to-day basis quite depressing. That's why they call it a depression. It's depressing. It is. And you see everybody going through it. I get depressed even though I'm safe. It's depressing. It's sad to watch people, in hardship. But now is truly the best time, and we'll see that later. It just doesn't feel like it when you're in the middle of it. The blood on the streets is already here now. So I do think that the best buying opportunities are still ahead of us. But it does not mean that you cannot get some really, really smoking great deals already. And so you just have to stay aware.
Yeah. And you're involved with a lot of businesses too, Matthew. So this is another thing that we talk about already with folks is this is going to be an opportunity of a lifetime to buy businesses, because there's going to be a lot of opportunities, and plus there might also be some good solid businesses that are getting through this, but people are looking to sell because we have another demographic trend in place too, that there's a lot of baby boomers that their retirement plan or their strategy was to build their business, grow their business, and eventually exit their business. So there's a huge business buying opportunity too.
I totally agree. I unfortunately was actually under contract on a business that I was going to be buying in Chicago mid-December, and come mid-March, we still hadn't closed. And suddenly Denver was locked down. That was actually following a lockdown in Chicago.
Yep.
And, after consulting with my team, my lawyer, I made the most difficult decision in my career thus far to pull out of that contract. And that was really tough, but I see it as, a godsend that we had some of the hiccups along the way to slow things down, because I truly believe that even that specific business might even come at a larger discount here in the not too distant future. I mean, it's not as though the seller was excited about selling then and suddenly doesn't want to now. I mean, if anything, he's more anxious than ever, and he and I have stayed in touch, and he understood my position with it. And we literally have all the legal documentation wrapped. I mean, all we have to do basically at this point, we were 4 days away from closing. We just have to sign. So who knows, maybe I'll get $185,000 business for $125,000 here, this summer. It still is left to be seen, obviously, but I definitely agree. I think you just have to be willing to hold out, but continue to keep your radar on full blast. I mean, you've got to be seeking the opportunities. They're not going to just fall in your lap. You've got to actually be willing to take a look at the strangest stuff. I mean, even that business was completely out of my scope of my wheelhouse. I've never been in retail. I've never been in cannabis industry. It was a non-THC CBD storefront in Chicago that we held off on. And who knows what's going to happen with that industry? It could be booming after this. I have no idea. But it was just too uncertain to move forward with right now. So we'll see how things go.
Yeah, absolutely. Matthew, where can folks follow you, learn more about you, and stay informed of all the many projects that you're involved in? You've got a ton of stuff going on and put out fantastic content. Where can they access it?
The best place to just hear what I stay up to is on YouTube. I try to be as transparent there as I can be. We do provide a one-on-one coaching service. At this particular time, we're disqualifying more people than ever before, even though that was our standard approach before, is to be very selective. We always reach our capacity when it comes to coaching. Right now, I recommend that people really hoard their cash and try not to spend money on things even that seem like they should. So I'm not sending anybody there to get involved in my services, but I try to at least showcase the things I'm working on there, talk a lot about how to focus on credit, how to get the best credit scores, real, tangible, actionable items that people can be following in order to do that. Because if you are proactive with credit, you can have a huge influence on it by just using a lot of free strategies. Then obviously how to tap into credit to get access to capital. So we talk tons about debt weapons on the channel, different types of debt weapons, how they can be used. I showcase how I'm using them. I go into my accounts and I show how transfers can be made. And then we show what we're investing into and how those produce, mistakes we make, how to get into what I call modern streams of income, how to get into, what I call lifestyle assets. Lifestyle assets are something like this Airbnb. This is something that we bought not just to make great cash flow on, which we do in normal markets and will again here soon, but we get to use it all the time, right? I mean, it's literally in my favorite town in Colorado. So we get to enjoy it 10 to 15 days of the month. The rest of the time, it makes us thousands of dollars in leftover cash flow every month by itself. So that's where we go in and we talk all about that. The channel is called VIP Financial Ed, short for education. You can put in VIP Financial Education. It'll get you there also. I always like to give away a gift for people that stick around this far in a conversation. We have created one of the best budgeting tools I've ever seen. It's called the Cashflow Cruncher. That Cashflow Cruncher tool is a spreadsheet that you can use, which will basically leave you a summary of information that I've never seen on any other tool that's provided regarding budgeting. So it's basically a balance sheet that will crunch all of your cash flow numbers and basically show you how you can get out of debt in a strategic way. That's at cashflowcruncher.com. It's completely free of charge. You guys can just download that for yourselves and use it freely. And finally, I do also give away one complimentary coaching session to everybody whenever I have a great relationship like yours, MC. And MC has been a friend of our channels for a while. We actually have him come on and talk all about the infinite banking concept. You know, I'm going to open that up to your audience here as well. So they can claim one free coaching session at freecoachingcalendar.com. And I actually do all those myself. At one point, the waiting list on that had grown to 11 or 12 months. I've managed to condense that down to somewhere around 3 or 4. I think we're out into July right now at the time we're recording this. But I will say that if you're going to claim a free coaching session from me, please do some of your own homework beforehand. Go on the YouTube channel and spend some time, spend at least an hour going through topic matter that appeals to you based on the subject line or the thumbnail. Don't get on the call and not have really any clue what we're there to talk about. I want you to come in with some purpose, because I can truly bring you a great deal of value during that 1 hour call. But as you might imagine, I mean, a 1 hour call available to everybody is a tremendous strain on my bandwidth. I do anywhere between 6 to 9 of those a day. I'm constantly criticized for it because it's obviously a huge use of, I could be using that time to be creating wealth versus giving away free courtesy phone calls. But it is a non-solicitous conversation. I don't go in there and try and sell you on anything at all. It is purely to try and help get you further, faster financially. So yeah, that's where I would leave it.
Awesome. And my listeners and viewers can already just think of the value that you would provide on such a call, because you've dropped a lot of value in this interview, my friend. 3 C's, the big takeaway, right? The 3 C's of banking: credit, capital, and cash flow. Very much a big focus should be of everyone. And then just stay away from negativity. Control your environment. Control the information that you can consume, because if you gain clarity and you stay focused, the future is going to be brighter than it's ever been. Matthew, I really appreciate you, my friend. Thank you so much for coming on the show and providing, as always, so much value for all of my listeners and all of my viewers out there. Appreciate you, brother.
Yeah, I'm always honored. Thank you too, MC. And thank you to everybody that spent their time listening.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or